Well, hello and welcome to this edition of Earnings Express. I'm your host Nickey Mirchandani, and we are going to be talking about the cement earnings this time around. Well, most of the companies have been playing by the book for the quarter. If you talk about the performance, they've been reporting inline numbers with a volume growth of 20 to 23 odd percent year on year, backed by a multi-year strong demand outlook in the seasonally weak June quarter. Talk about Tree Cement managed to post in-line numbers, reported the highest unitary EBITDA performance compared to the industry leader Ultratech for the first time since Q4 FY22 after a span of 4 quarters. Ultratech Cement best-in-class execution with a quick ramp-up helped the company to post in-line set of numbers. However, a lack of cool-off in the power and fuel cost weighed heavily on Dalmia Bharat's performance. Weaker volume growth and realization played a spoil sport for JK Lakshmi Cement, but the real surprise came from ACC, which reported twofold jump in its net profit, helped by volume increase, softening of fuel prices, and improvement in overall operational efficiency. In fact, even in terms of stock performance, ACC has managed to gain more than 7% over the last 1 month as compared to flat performance witnessed by Ultratech Cement and Shree Cement, which down and out by 12%. In fact, they've been flat. A 12% downtick has come in for Dalmia Bharat. On 1 year basis, Ultratech and Dalmia Bharat have eked out gains of over 20%, while ACC has lost some ground, which is close to 10%. Now, the key question here to ask is, how really, have the petcoke thermal coal price bottom out? Would the lower energy prices be passed on while lower cement prices? And to take the discussion forward around the sector, we've been joined by Nirav R Karkera, the head research Fisdom. Good morning there. I'm going to start off by asking you your initial assessment or Q1 reading for the sector, which has been witnessing demand and receding cost pressures, if I may so say, or are we still on there as yet?
So, hi, Nickey. Always a pleasure to be chatting up with you. So, first
Pleasure.
things first, the results were largely in line with with what most analysts have been expecting. The sector itself is riding the sectoral tailwinds that are largely applicable broadly throughout the sector. There's obviously a public capex boost. There is an infra focus from at the policy front. There are a few tailwinds that are that's really taking the tide up and all the ships. Along with it. However, there are a few things that one needs to understand that most margin expansion here has been on the back of lower fuel and power costs as costs have been receding. And like you rightly pointed out, the important question of the hour is have the prices of input materials bottomed out or not? So, hey, while I acknowledge that we live in a VUCA world and while I'm conscious about the fact that anything could change at a pace faster than what one anticipates, but we could say with a fair sense of certainty that input prices could remain in this range or could remain range bound going ahead unless there is a trigger on either side. The companies will continue to benefit at least through yet another quarter. At least that's as far as the visibility is going, even by a stretch. So the input prices could be accretive at least through another quarter. One important thing to understand is that balance sheets of these cement companies are healthier than ever. If you look at it at an overall level, at a sectoral level, the balance sheets have not been as healthy in probably the past decade or more. So now is a really good time for them to really commit to their capex expansionary plans, and we are also hearing news and announcements in line with it. So these are a few good things that are happening with the sector. However, going ahead, one could expect demand to slightly recede. There is a looming borderline risk of overcapacity, as with the most of the pent up demand around realty fading away and most of the infrastructural demand getting plugged into the pipeline and being implemented. One could expect the demand to slightly soften, and especially after the general elections in the upcoming year is over. So there could be a situation of overcapacity. However, we are talking FY25 and ahead. It could be slightly far-fetched at the point, but that still remains a looming concern on the horizon.
Nirav, I'm going to touch base on the demand situation and the run-up to election market share and a bit more about that. But before that, I wanted to get done with the basics first. Within the basket that has reported numbers this far, what stands out for you? Has ACC surpassed the expectation in terms of volume growth?
Yes, ACC has definitely surpassed expectations. I feel not just in terms of volume growth, but also across the board. So while it is also visible in the performance. While peers were not, the stock price performance, while the stock price performance of peer groups weren't as thrilling per se post results, ACC has been doing really well on the bourses, and it reflects investor confidence, and which is also drawing upon the stellar performance that ACC has recorded. So definitely, it has surpassed expectations on the volume front. It has surpassed expectation in terms of cost efficiency. The on the back of improved lending ratios and lower fuel prices. The cost efficiencies have really started to kick in, and we always have some positive triggers like the cost rationalization to pick further pace, and synergies with the Adani Group to yet unlock, that still stands way ahead of us. So yeah, so all in all, the triggers are really promising for ACC, and the results have been encouraging so far.
Within the basket, if you see, ACC has reported good set of numbers. It's a 7% uptick that we've seen in terms of the stock prices out there, as compared to a flattish performance that we've seen otherwise by Dalmia Bharat, Shree Cement, Ultratech Cement. But for ACC, even in this quarterly earnings, we saw an update coming in where they said that they're not going to be further investigating in terms of the Hindenburg allegations which have come in for Adani Group of companies, where the takeovers, of course, now it's a Adani Group of companies. What stands out for ACC? Because you can see that not just in result performance in this quarter, but also the stock performance. ACC thus far has been a laggard for the last 1 year or so, if you look at the stock performance. But in this month onwards, you've seen that momentum building in. What's really working exceptionally well for ACC, if I may ask?
So there are a few things that are working complementarily with each other. So I will double click on a couple of points I made earlier as well. One, there's a lot of expectation being built into these stock prices in terms of value unlocking that is yet to happen in terms of the synergies with Adani Group. Second, there is a tendency to compare the valuations among peer sets, and while it is a subsidiary of the much larger Ambuja Cements, which happens to be one of the most costliest stocks in the segment. On a relative basis, the valuations for ACC seems to be pretty much in the comfortable range. There is a lot of value unlocking that is yet to be done in terms of valuations. So many
Nirav,
look at it as a
ACC isn't the costliest stock within the basket, right? It's Shree
no,
Cement
no.
essentially, which is probably richly valued here, if I'm not wrong.
No, so ACC is not. ACC is not. Clearly, there is a value play within ACC. I was comparing it with Ambuja cement. So relative to Ambuja, there is a lot of value at play within ACC. And if you look at the EV by EBITDA and you compare it amongst peers, there seems, and you take it in context with the growth prospects, it all really lines up really well for the growth narrative within ACC. So these are few things that are culminating together. Definitely, Shree is also richly valued, but the growth story that lies ahead of ACC is not really comparable to that of Shree at this point in time. Obviously, Shree has its own merits, and it has its own things working in favor. But when you look at ACC and the growth prospects and the synergies coming in from the Adani Group, and the comparison with Ambuja and other listed players and its market share, that it is incrementally gaining through and other players are conceding market share to ACC in key regions, especially central India. A few of these dynamics are really working together to create and build a strong case in favor of ACC. So yeah, so ACC is clearly, in terms of valuations, we see an opportunity going ahead for ACC, and it is really far from being completely valued as yet. There's still some bit of value play left.
Sure, Nirav. Let's resume our conversation back to the understanding that Do you think these companies will now focus more on market share as compared to the prices in the run up to the election year, especially with the incremental capacity addition which has been taking place? How is the second half of the financial year shaping up for all these companies?
Yes, one can. So the competition is clearly intensifying with the entry of Adani Cement. It has all the other peer sets on the edge of their seats. Competition is intensifying, and one play to defend market share is the pricing play. And the quarter one results and the quarter one print is a testament to how this is shaping out and how it will be carried forward to quarter two. Also, generally, seasonally, the first quarter has been a stellar quarter in terms of pricing for cement companies. This is the quarter where generally, cement companies have a lot of pricing power and they manage to become price makers for, to a great extent. However, this quarter, the situation was very different. Considering the intensifying competition, we did not see as much increment in cement prices as we are used to seeing in the past and in the first quarter of the past fiscal year. So this could continue happening going ahead. So while demand continues to remain at peak and probably plateau at where it is now, if not plateau, at least flattish. The competition is really intensifying. The top five cement companies are definitely trying to gain more and more market share, and there's a lot of infighting between this big pack where they are trying to defend market share from each other while trying to acquire more. The next year of cement companies seem reasonably positioned. They have strong balance sheets. They are able to. We expect them to be able to defend their market share really well. And amongst the scheme of things, one can expect the larger cement manufacturers to actually soften their stance on the pricing front, and one could expect pricing to be subdued going ahead as well. And the same will also be reflected in their operating and EBITDA margins going forward.
Sure. Let's chat about valuations in this case. Of course, the valuation of Shree Cement seems to be highest, like we discussed amongst the lot, and because of the performance also in this quarter. If you talk about Shree Cement's reported EBITDA per ton, it's come in higher as compared to that of Ultratech Cement for the first time since FY22. Just looking at the valuation profile, do you think the valuations are justified, or you think there is a lot more to catch up, more of catch up to take place for ACC as well as Ambuja as compared to that of Shree?
So Shree, I would say it is richly valued and very fairly so. Quality comes at a certain price. It could be a tad bit too rich when compared to peers, but it has its own set of things that's going in favor of Shree Cement. One would look at Ambuja as slightly more richly valued to the growth prospects that lie ahead of it, and the sustenance of the performance that it has been generating. So Ambuja could clearly be a case of rich valuation, wherein most of the positive triggers have been very aggressively priced in, and looming risks and challenges are yet to be fully factored in. So Ambuja Cement, tilts towards the rich side of valuations. However, ACC is right on the opposite. We expect a lot of value unlocking going ahead within ACC Cements. The valuations are reasonable at this point in time. We expect it to really catch up going ahead on the back of improved earnings and improved margins, and robust business growth in several segments also going ahead. So if we were to place all three on a certain scale, and we have Shree at the center being as justifiably, more so justifiably expensive ratings. Ambuja would fall to the right as slightly steep and questionably richly valued, sort of a side of the scale. And if we look at ACC, one could look at it as a far more closer to fair valuation at this point in time, and growth prospects to really warrant an upgrade in the stock.
All right, Neera, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. It was really a great chat that we had. We spoke about a bunch of things, right? We spoke about fundamentals, we spoke about valuation, we spoke about the stock performance. But with this, it's a wrap and goodbye from the entire team who put this piece together. Do write in, give us your feedback. How do you like this edition? Areas that we could improve. But with this, it's a wrap, and thank you so much for tuning in.